Matt, very good to be with Crux investors talking about Revival Gold. My name is Hugh Agro. I'm the president and CEO of Revival Gold. And Revival is advancing the Beartrack-Arnett Gold Project located in Idaho, in the western state of Idaho in the United States. It's the largest former producing gold mine in the state of Idaho. We're working from a brownfield site. And we have really three strategic advantages with this project. Number one, the location, top ranked in the world. Number two, we've got infrastructure, including an ADR facility and power and so on to site. And number three, we've got a very favorable PEA on the first phase of this project to produce gold in this cycle.
Brilliant. Lovely to meet you, Hugh. And we have briefly caught up in the past, but we've not really met or spoken. So I'm keen to understand the story here. So why don't we start off with a little bit about you? What's your background relevant to what you're trying to do here?
I'm a mining engineer by training. I cut my teeth at Placer Dome and then went on to Kinross, where I was part of the team at Kinross that took that business from 1.7 billion in market cap to 17 billion in market cap. I retired in late 2009. But I came back into the business in 2016, 2017, when I saw this great opportunity, a revival really, in the gold price and the opportunity around this project in Idaho.
Well, the revival's coming and going. It's been a quite a year for gold this year, but I think next year promises more. So let's talk about what you walked into. So you saw this. What did you see at that time? We'll talk about the PEA in a second, but what did you see when you first walked in? What was the promise?
Well, yeah, really what we've got is this wonderful location, a very mining-friendly part of a very mining-friendly state, number one. And number two, we've got this infrastructure that I've been talking about. So that gives us a head start in terms of our capital and our development plan. And thirdly, and most importantly, the people. We've got the former general manager for the operation, a gentleman by the name of Pete Blakely, who's run this mine and lives in the town of Salmon, Idaho, where we're based. And we've got on our non-exec chair, a gentleman by the name of Wayne Hubert, who has had a long history with Meridian Gold, the former operator of this project, and then went on to great success with Andean Resources, which some of your listeners will remember was sold to Goldcorp for $3 billion a number of years ago. So it's the team, it's the location, and it's the brownfield nature of this asset.
Okay, so I think the problem that most people are looking at this company and saying is, hey, where's the scale here? You've got a PEA, 100 million market cap, maybe 72 million ounces a year, a lot of work between now and then, and you've done your numbers at 1750 gold. You've got a lot to prove still. So where's the scale come from? Because if I look at the market cap, somewhere between 45 and 50, depending on a good day, it's not working at the moment. What's wrong?
Yeah, I think the market is just kind of getting tuned into the scale of this project. Really, we've got 3 million ounces in resource. We've built that up over the period of the last 4 years at a finding cost of less than $5 an ounce. So a lot of people are just starting to tune into this and recognize the potential of this deposit. We've got 5 kilometers of strike mineralized throughout, and we're continuing to grow that. Our drilling this year is pointing to the Joss area at Beartrack-Arnett, where we're getting grades and intercepts like 85 meters of 2.7 grams per ton gold, within which we've got a higher grade core of 12 gram material, 7 gram material. And this is over a strike of about a kilometer. So we're talking about a lot of scale here with this deposit, big geology, orogenic gold system. And we've only in this first phase of the project got 1 million ounces, just less than 1 million ounces of the total 3 million currently on the books in the economics. So there is a second phase to this project, a lot more scale, and I think the market's just waking up to it. Okay,
but there's the point, right? You talk about 3 million ounces, all categories, just under 1 million M&I. That's the disjoint, because at the moment you're competing against a lot of companies talking about 1 million ounces. It's the barrier you've got to get over, but there's a lot of noise in a gold market, which not many people are looking at the moment. So what do you need to do to step that up, move more of that inferred into the M&I category?
Well, I think it's happening. We've got drill results, as I've been talking about, We're moving forward with the resource update in the first quarter. We'll be doing a PFS, taking our PEA to a PFS level at the end of 2022. We're already advancing with regulators in our supplemental baseline data for the purposes of the permitting process, the re-permitting process. And so all of those steps are taking place. And this is a team that's done it before. We've built value for our investors in the past. We've delivered on projects like this. And so we've got it queued up.
So how do you pay for it?
This is where we've got such great benefit over many of our peers. One of our key investors is Orion Mine Finance. They backed the team early on to put this project together. They are a multi-billion-dollar private equity fund investing in the gold space and other metals. And so their sweet spot is the construction and development of projects like this, located in good geography. And so we've already got cornerstone investors who will take us through the first phase and beyond. And remember, in a gold space that's got a lot of projects out there, one of the things that investors need to focus on is capital efficiency. And we're talking about $100 million of capital, as you mentioned, for this first phase heap leach. So it's a manageable quantum. We've got the shareholder base, and we're making solid progress on all the engineering, re-permitting, and other aspects related to developing this project.
But are you prepared to lose some of the efficiencies at this early stage just to get into production? Okay, because at the moment the PEA, okay, plus or minus 30% is, PEAs are wide and varied. You're over $1,000 AISC, right? It's $100 million, which is okay, not too bad in relation to the market cap, and you've got a backer. You've named Orion in there, prepared to back you, maybe because of your track record, but you're going to lose some of the efficiencies by getting into production early. So why would you do it that way? Because most North Americans say we're going to drill this thing out to the edges of the envelope and then we'll take it from there. Why is your strategy different?
Yeah. So that's a really good point you've picked up on. And it's one of the things that I've observed about the Australian industry, that we Canadians have missed. The Australians, in effect, bootstrap their projects, and they save their investors the dilution that comes with these ambitious exploration and development programs, billion-dollar projects. And what we've chosen to do instead is work from a brownfield site, work with top flight engineers, so we're not going to have capital blowouts from over promising and under delivering. And secondly, to phase the project. So we'll minimize the dilution to our capital base, get into production at this point in the gold cycle, use the free cash flow, $50 million a year of free cash flow from this first phase operation to continue to invest and build out the second phase operation. Now, I'm not naive about the appetite that the majors have for projects like ours in good geographies, long potential lives, lots of gold production. And if a major comes along and says, look, we want to put phase one and phase two together and do them as one, and they have the capital base to do so, fantastic, if that's a winning bet for our investors. But in the meantime, in a capital constrained environment, we want to phase this project, make for an efficient restart of the operation, produce free cash flow, and do so from a head start with this infrastructure, the experience we have with the site, and the access. Okay, so
I'm sorry, I want to be able to discuss part of what you said there, or at least understand it better if I can't, which is you're talking about majors coming in and looking. Majors aren't going to come and look at this unless it's 200, 250, 300,000 ounces, right? So you're just done the PEA, you're working towards a PFS stage. There's no, and given the strategy of a phase one, phase two, et cetera, the reality is that you're going to do phase one. There's no one going to be merging phase one, phase two anytime soon, is there? Unless you're telling me this conversation is going on.
Listen, we'll make that decision at the end of 2022. Or, as I mentioned, we're doing a resource update at the beginning of next year. We've already conceptualized plans for the mill phase. We've done two stages of metallurgical test work. So we're very confident about a 94% recovery in our mill phase. And we think this will be a plus 200,000 ounce a year producer with a 15 to 20 year mine life. There is no reason why this deposit will stop at 3 million ounces. We think the potential here is better than 5 million.
Okay, so talk to me about how that happens and how much it's going to cost you, because you're talking in the PowerPoint about maybe 72,000 ounces if you get it right, through to 200,000. There's a few studies to go. There's a lot of money that will need to be spent to do that. So can you just explain that period and how you would come at it?
Yeah, for sure. Our finding cost to date has been in the order of $5 an ounce. It'll go up and down as we progress, and particularly as we get into underground aspects of this deposit. But clearly, we have potential here on strike within the 5 kilometers of mineralized strike to add to our resource, build on the underground potential. And so, yeah, yes, there will be capital required around exploration to develop that potential out. But I think, at $1,800 gold, and considering the location in the United States where we have rule of law and certainty of title, this is a good place to be investing. And I want to come back to Idaho as a place of operation. There are 26 million ounces of undeveloped gold in the state of Idaho. It is ranked number 1 in the world by the Fraser Institute for Policy Environment, top 10 in the world for investment in mining and exploration. So this is a place that's got a long history of exploration and mining. It's got certainty of title, and it's a good place for large companies and large investors to be deploying capital to produce gold.
It does, and there's lots of train wrecks as well. So I want trying to work out where to put you, because I've asked you about money. So we got Orion, but we've got no numbers mentioned there. Have they been following their money? Will they continue to follow their money? How much money have you got? And then the question I just asked you, which was, how much money will you need to spend in that kind of phase 1 to get you through to whether it be pre-phase or feasibility study, whatever you are going straight to. So can you just give me some numbers? I get a sense of what more is to come in terms of demands from the market, in terms of raising more equity, or if there's another way that you're going to bring money in. If you could explain that, it'd be brilliant. Yeah,
typically a project like ours will involve something like another 5-10 million to take itself through the feasibility stage. And then we're talking about the 100 million of capital that's in our PEA. So just giving you orders of magnitude there, Matt, in terms of what is required. In terms of Orion support and the other 40% of our shareholder base that is institutional, I'd say it's rock solid. We've seen participation from funds on all of our previous financings. And I want to mention just quickly here, we are 72 million shares outstanding. That's it. We've taken this project from nil to now 3 million ounces of gold, a PEA, a resource update on the come, and all of the technical work around geotechnical, metallurgical, largely complete or in process. So this is a company that works very efficiently with the cash that we do spend. We guard our share count carefully, and I defy to find another group that's done as well as we have in terms of our spending on G&A, our conservation of our share capital, and what we've delivered in terms of results.
Okay, so how much cash have you got today?
We've got about 3 million at the moment.
Right. Okay. And what's the burn?
We will spend that over the next 2 quarters as we get through the drilling and the drilling results this year, and then through the resource update next year. So we'll be looking at some sort of a financing initiative at some point along the way here, likely after we put out our resource update.
Right. So you're aiming for Q1 for the resource update. Is that what you're saying?
Correct.
Brilliant.
Yes.
Okay, fine. And would that be the 5 to 10 million number that you talked about earlier?
Well, we'll see. Our last raise was 15 million done as a bought deal through BMO Capital Markets. We'll see how the share price is and how things line up. But we're pretty efficient, Matt. Our G&A burns at about 2 million. So if we're in a good market, we'll raise more. If it's not a good market, we'll preserve our capital base. So we think gold's got nowhere to go but up, given the current fiscal and monetary policy in the world. We're very bullish on gold. We're bullish on the project, and we think it's one that will do very well for investors.
I mean, the problem isn't the price of gold. The problem is the price of the equities at the moment. People are looking elsewhere. So when you say you'll preserve capital, you're prepared to kind of hunker down. I'll use the word loosely, and I stretch the money out until you see the market recover. Is that what you're saying?
Well, yeah. If we need to do that, of course, yes. We're stewards of capital, stewards of our shareholder base, and one has to be careful not to over dilute, and I think that's something that we'll work to avoid. And we've done that in the past. You'll see on all of our past financing activity, but for one, we've progressively raised money at higher share prices. We had one down round during the crisis that came with COVID. Our shareholders stepped up, including myself, and we lived to a better day. And I think if we hit a crisis or a bump down the road, we'll do that again. I feel very confident about our backing, about our project, and about the milestones we can deliver ahead.
So I do want to talk about drilling actually a second, but you just said something there essentially. So you have stepped up as well. How many dollars have you got in this? Not how many shares, how many dollars have you put into this thing?
So I'm at about 5% of the business, and my cost base is not much below where we are today in terms of our share price. Orion Mine Finance about where we are at a share price today. So we're highly motivated to deliver. We're not. This is all free trading paper in the company. There is no. There is no seed stock that has to come out here. This is a very clean capital structure.
Okay, fine. And so I assume then you're sort of not paying yourself. You talk about low G&A. You're not paying yourself much. Is that how you're kind of keeping everything low, or is the board taking salaries?
Yes, everybody's taking salaries. Everybody's dialed in here. What I'm saying is that we work efficiently with the money we do spend. And we've got some really good people on the team. I mentioned our general manager. We've got a VP exploration who's been in the industry for 30 years, has done a fabulous job in terms of the efficiency of our drill programs and the results we're getting out of them. Again, I come back to that $5 an ounce finding cost. And then we've got an administration, our CFO, Lisa Ross, doing a fabulous job in that role, ex-Kirkland Lake, ex-Kinross like myself. It's a team that's dialed in, working hard, delivering for investors.
Yeah, I guess what I was getting at is, are they dialed in with majors' salaries, or are they dialed in with an explorer developer salary?
Yeah, look, we're on an explorer developer program here, and the reason is because we're owners of the business, and we're aligned with shareholders to deliver results alongside our shareholders. We'll do what's best for shareholders. This is not an intermediate cap gold company or a large cap gold company like Placer Dome or Kinross that I've worked with before. Where G&A goes out the door. This is one that's focused on delivering value, ounces in the ground discovered, projects advanced, and projects constructed efficiently and managed well.
Okay, so let's look forward then, okay? Because I'm just trying to get an overall view and a sense of you, the man, right? So in terms of the money that you're going to need to go and raise, you talk about converting some of the inferred over to M&I category. You're going to come out of the resource in Q1 at some point, right? So the type of money that you're going to be spending is all about infill drilling to get the inferred over. You're not out hunting for additional exploration targets at the moment, are you?
Oh, no, we've been doing that too. We've brought in Mira Geoscience to help us with AI, artificial intelligence, looking for targets beyond what we already have. I've mentioned this 5 kilometers of mineralized zone. We've got targets on our Arnett side of the property that we haven't even touched yet. We've got intercepts upwards of 2 grams close to surface in oxide material at a Romans Trench target. We've got the Italian mine, which is a historically operated area back in the early 1900s, hasn't been touched yet. Our focus and activity has been around resource development, has been about advancing through economic studies, but at the same time, we've also spent money looking for the next area for exploration. And we've got another 4 or 5 targets on the property position ready for drilling and permitted.
Okay, so what I'm trying to understand here is, because we talked about scale at the beginning. I think that's the big thing that you've got to try and deliver here is you've got to be efficient, your word, but the way that you do that, so in terms of where you spend your money, how you spend your money, and what you're trying to create. I'm looking at some of the data here, which was talking about average gold grade of 0.87, so below 1 gram per ton. It's a bit low. It doesn't include the 2020-21 numbers. I get it, but if you're around that 1 gram per ton level, bringing inferred or some of the inferred, let's say 50% of the inferred into M&I category, it's still not big enough for you. So you are going to need some of this exploration potentially, aren't you?
Actually, it is big enough. The first phase project is about 850,000 ounces at about 0.9 grams per ton gold in a heap leach scenario. Remember, we're saving a lot of capital because we've got the existing infrastructure on the project. The margin on those ounces after our fully loaded AISC cost is still a healthy 70 or 80% on the current gold price. So that is in itself a tremendously attractive project. 0.9 grams per ton heap leach puts us at twice the grade of pretty much all of our peers in Idaho. And many of our peers in Nevada are mining 0.2, 0.3 grams per ton. So I would challenge you on that point. And I just looked to the economics on the project. 25% return IRR at 1550 gold, 38% IRR at current gold prices. Now, the second phase project is higher grade. We've got in the mill phase at Beartrack-Arnett in the open pit, 1.5 grams per ton gold. The cutoff grade is 0.6 grams per ton gold. So we're looking at something that has better than a double on the margin there from the cutoff grade. And I think any of your listeners will recognize that as a very attractive situation. As we get into the underground, we're seeing even higher grades still, 4 to 11 grams in true thicknesses of 1 to 5 grams over a kilometer of strike, beyond which we've got a lower grade halo of 2, 3, 4 grams. Again, bulk mineable situation in the underground. So lots of potential and lots of grade here to justify development of the mill phase. We just haven't found the end of it yet. Once we do that, we'll move to a PEA and then subsequently a PFS on that mill phase of the project. Right.
Okay. So that's really useful. Thank you. I'd be mad to credit you, the numbers at today's gold prices. I'm going to discount it. So 1550 numbers still give you 25% IRR. So that's something to build. With the phase 2 that you're planning and the underground phase 3 a component to this is, my fear as an investor is that companies just keep plowing the money that they make back into the ground, and I don't see the benefit of it. So how do you manage that? You come on, Placer Dome, Kinross, you went through, I know different times, but there's going to be learnings there. How do you ensure that, we the investors don't get left out of the party here and you guys are the main beneficiaries?
I think the way to do that is to ensure that the management is aligned with investors, that they in fact have a significant stake in the game. And that's where, again, Revival Gold, our governance policies, our approach to compensation are very well aligned with investors. We won't make a return on this until our investors make a return on this, and we're committed to the long run.
What does that look like? Because all CEOs say that to me. We're aligned. We're always aligned, but they're also on big salaries and they get option packages and so forth. So when you say, because I like your tight shareholding structure, but what does it actually look like when you say we're aligned with shareholders or we will be aligned with shareholders?
Well, a great example of that is that when we make decisions about how we spend money, we think through what we would do as individuals if it was our money. Would we fly business class? Would we stay at the better hotel? Would we go to just a single bidder for a piece of work? Would we, dot the I's and cross the T's on the contract to make sure that we're getting the best value? Those are the sorts of things that are tangible decisions that managements make every day, and they all add up. Those pennies all add up, and in our case, they add up to a sub $2 million a year G&A rate for this business, which I think, is an example of the care we take with our shareholders' money.
Okay, it'd be interesting. Yeah. Okay. Well, people can look at comps and work out whether they feel that's fair.
Yes,
or not.
I would encourage them to do so.
Okay. I want to talk about AI. You mentioned AI. You need a lot of data points for AI, don't you? Right. So, what have you inherited in terms of data points? It's a brownfield site, but what have you got?
Yeah. No. Good. Very good question. We've inherited a lot of data, and it's a challenge, but it's also an opportunity. The challenge is, there's a lot of it to go through, and so we've put it all into an electronic format. We've got about 150 kilometers of drill data. We've got tens of square kilometers of geophysical data. We've done quite a bit of soil sampling across our land position. We've got structural mapping, all of which is only recent. In the days when this operation was producing gold back in the late 90s, early 2000s, there wasn't an interest in looking at the structural aspects of this deposit. We've got an intercept of 10 meters of 71 grams per ton at a structural confluence in the Wards Gulch area at Beartrack. It's at about 450 meters depth, and it wasn't of interest back when the operation was just producing from an open pit. We've got that data. We've assembled the structural model now. We've got all of these geophysical pieces and the drill data, and all of that sort of has come together now in a fully three-dimensional model to which we can now apply the machine learning to look for instances where we get higher grades and where we get confluence of mineralization across this large fault structure that hosts the gold deposit at Beartrack-Arnett. And that's helped us with targeting. And there's going to be a lot more that comes from that. We'll get to that now that the team's out of the field from drilling and looking at the program for next year.
And so how much money would you allocate towards that? Because I think when companies come and talk about AI, it's like it's new to them, right, as well. And they're trying to work out, do I believe this? Do I trust this? I can't go all out on it. So you got to allocate part of your budget to it. What are you thinking at the moment?
Yeah, it's one of the tools in our kit, and there's no substitute, as our VP Exploration likes to say, for having hands-on experience. The computers cannot do everything, but it is something in our toolkit which, your point, we've got lots of data. We need to be able to leverage that data. And so it's just one of the tools in our toolkit. I think we probably spend about $100,000 on the initiative. Some companies spend more, some companies spend less. We take a phased approach to this. We've developed up a number of targets. We're going to test those targets, and then we'll come back to the data set and back to the 3D model. And I'll tell you, Mira Geoscience did a wonderful job for us. We're very pleased with the work they did.
Okay, fantastic. Well, look, I think you've kind of laid out what's happening in the near term, and you're saying by the end of 2022, what do we hope to be able to talk about?
We'll have the PFS. We'll have completed all of our supplemental baseline data and developed up our plan of operations. And it'll be at that point that we make a construction decision. We'll either proceed and press the button on restarting the first phase, which is a relatively modest scale, but low technical risk, low capital means to get into free cash flow. Or we'll continue to progress the project's mill phase and develop out that alongside of the heap leach. So end of 2022 will be an interesting decision point for our board and for our investors, and we'll have all of the key pieces lined up to be able to make the decision and continue with the development of the project. One way or another, as a restart project or with continued exploration, we see the optionality in this project to deliver what's best for shareholders.
Tell me about that. Sorry, I was literally going to wrap it up there, but no, you keep saying interesting things. At the end of 2022, with the PFS, you think that you can get finance. I could see some of that happening last year in 2020 when money was being thrown at any old thing, right? This year, not so much, obviously. You've used the word restart there. Is that the word that allows funders, certainly on the equity side, well, I guess, and the debt side, to say, actually, it is quite simple. It's heap leach. It's been done lots of times before. I'm comfortable giving out $100 million. It's not nothing, right? Off the back of a PFS. You think that's doable?
I do think it's doable. We would not construct the project on the back of a PFS. I think we've seen lots of folks get into trouble doing that. But I do think we can make a decision on proceeding with the project. We'll have sufficient data to be able to feel confident about the returns from the project on completion of the PFS. And again, remember, we've got, I'd love for you to show a picture of the site to your viewers. But we've got an ADR facility, a gold processing facility. We've got roads. We've got power to the site. It's active power. The roads, provide us with the access that we need. So there isn't a lot to that $100 million of capital that is at risk or complex. It's relatively straightforward. And I should tell you too, about 40% of that number is in contingencies and owner's costs. And so we've got lots of room there to deliver the project on budget, and on plan. So it is a relatively straightforward project. And I do think that on completion of the PFS, we'll have enough information to make an informed decision about proceeding with construction. Now, the next steps after that, you've asked about timing. We'll proceed with the FS from the PFS, the detailed engineering, the re-permitting aspects that are required, and we'll be in construction 2024, producing gold potentially by the end of that year or early 2025.
Okay, brilliant. Maybe you come on and talk us through certainly on the exploration side, the infill drill program and some of the exploration. I'd be keen to understand that better, and maybe talk about some of the met work that you've been doing too along the way. But look, really appreciate you coming on. Nice little story there. Looking forward to seeing how it develops. Hugo, so do stay in touch. Let us know how you get on, okay?
Thank you, Matt.